Hi, folks. Lee Gettess here with the Market Sense for the week of January 10th, 2017. Trades come to us from the Trade Navigator software, or at least the charts we look at to generate them. And we're looking at a weekly bond market chart here. And as I've been saying, this kind of looks like a rounding bottom to me. The problem is they're 4 weeks off the low now, and they really haven't gotten very far. I mean, last week showed a little enthusiasm, but the normal thing for a market to do is go back to the level they broke down from, which is way up here above 156. So they're not doing a very good job of getting there. For this week, we were looking at support right in the 150, 104 area to hold. They haven't gotten down to that yet. And that would leave us a target up here around 153.20. They haven't gotten there yet either. Again, if this is a rounding bottom, you'd expect them at least up to the mid-Keltner channel, which is above 156 this week. But, gosh, they could drop down below 150 and they wouldn't be in any trouble. It would just be back in this area here in the middle moving average. But they're just not showing a lot of enthusiasm. You would expect them to be showing a little more. I would expect them to be showing a little more enthusiasm here. They are coming up off the low, though, so I suppose we got to give them enough time. It is early in the year, and first couple of weeks of the new year often are a little squirrely. Stocks have got sort of a different situation. You can see the weekly bars up here are a little tiny, kind of hard to see. We had a little better than a month blast off from the election night, and they really haven't done a whole lot since then. They're just kind of treading water. I mean, we did see a move to new highs last Friday, which they have not been back to this week. That's a little disappointing. We're looking at support here in the 2255 area to hold if they're going to continue higher. And the next upside target is around 2285. And that's just a target. That's new all-time highs. So I don't call it resistance. It's certainly not something I'd want to sell. Also, you got to look at this and say, well, if they break down to the lower moving average there, the lower red line at 2240, is that bad? No, they'd still look pretty good. Heck, this back here in the middle of the chart, this is really the area that they broke out above, and that's all the way down around 2175, 2180. So they could have a little break here and still not be in any trouble, but they're not showing any signs of that. They're really just not showing any signs of anything. And as sitting bonds, that's not uncommon. For the first part of the year, it's tough to get traction before Martin Luther King Day, and that happens to be the same week as the inauguration this year. So, gosh, we may be looking at the fourth week of the year before we can get anything going, and no promise that we'll get it going then either. So that's what we're looking at today. I hope you can find something profitable to get